A big Chinese stock ETF has been losing a lot of steam lately, and that's the iShares China Large Cap ETF. You know what the ticker is, FXI, as you can see here. Now, it's an ETF that tracks 50 large cap stocks in China that are traded on the Hong Kong exchange. And over the last 20 trading days or so, the FXI has actually fallen in 17 of them. You can kind of see there. So as we talk about them, we'll see if they close in negative territory by today's end. Now, during that span, those shares have lost about 14% of their value in that time. They've lost over a fifth of their value just since hitting a high back on January 26. So you can see here by that right-hand side of the chart, we have seen a lot of downside momentum. A lot of that downside has been attributed to those heightened trade tensions between the U.S. and China. Those shares seem to have found some near-term support. You can kind of see they're just below that $42 level, despite a new round of U.S. import taxes slated to take effect on Chinese goods tomorrow, and an expected, of course, in-kind response from Beijing. Now, the fund management team at BlackRock, which manages this FXI ETF, says they are still constructive on Chinese stocks despite those trade tensions. They think that a lot of this protectionist threat stuff is really just largely a negotiating tactic side of things. Nonetheless, traders will be watching certain big Chinese internet names traded here in the U.S., like the ones you see here, Alibaba, Baidu, JD.com, and others. They are seen in some way, right or wrong, as a proxy for sentiment around Chinese investing. So Michelle, certainly ones to watch, just given the sentiment around trade tensions with China these days.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.